Hey everybody, welcome back to Markets and Sectors. My name is Mike Fairburn. Good to be with you folks today. I want to outline and lay out there for you today posture for the markets. How can we determine posture each and every week within the markets? I've got some ideas here for you. Let's take a look at that. Are we going to be bullish? Are we going to be bearish? What about the long term, intermediate term, short term? So looking forward to going into that with you today. I'm joined in the chat as well by a good friend and colleague of mine, Barb Armstrong. We'll see her in the chat as Barb. Great to have Barb on board with us. Very knowledgeable. Appreciate Barb being here. In fact, folks, you can follow Barb on X. Encourage you to do so. Barb Armstrong, not Barbara, Barb Armstrong CS. You've got to spell that correctly because there are a few stragglers out there that try to get different names that are closely associated with it. Mine is not Michael Fairborn, but Mike Fairborn. Same thing. Mike Fairborn CS as in Charles Schwab. Welcome to each of you. How is it going? Jay Richardson. We've got Lola. Are you Lola, as well as David, Beth, Greg, Will, Riceberg? Welcome to all of you. Look forward to any comments, your questions you have. We'll try to keep a close eye on that chat. So if anything comes up, it's relevant to, maybe specifically even putting up on a visual presentation. Sometimes that's easier. It's a little bit more clear too, and can save Barb some time as well. So I'll definitely keep tabs on that. Now, with that, let's dive into some disclosures to get going here. All right, information here is for general information purposes only. Schwab does not recommend the use of technical analysis as a sole means of investment research. The paper money software application is for educational purposes only. Now, investing does involve risk, including for some products more than your initial investment. Futures and futures options trading involves substantial risk not suitable for all investors. Now, we do include futures, some futures disclosures in here, futures options disclosures, because we do want to look at the charts. We do not trade futures in here, but they can be very, very relevant when looking at market conditions. Lastly, wanted to state, past performance is no guarantee of future results. I don't know if we have the STAX index up available yet, but I did want to state that historical data should not be used alone when in making investment decisions, and the STAX is not a tradable index. And we can take a look at the STAX, though, while we're here. So today, let's see if it does show up. And with that, let's dive on into our discussion here, looking at the S&P 500 index. Kind of interesting, kind of a pullback down first part of September, which tends to be a little bit weak. There's a little bit of a bounce back. You've got to still say, we got to look at what we're seeing right now on the chart still as it stands. We got to look and see what the price data is showing. And if we break it down, regardless of seasonality, or whatever the case might be, let's just pull it up and take a look at it right now. Higher highs, high, and higher lows, higher lows. It's ascending up. And some would call that even possibility of forming an ascending triangle formation as you're getting closer and closer to the vertex. Now, this is on a short, maybe closer to an intermediate term basis, as you can see that, but the long term has been strong as well. You notice these two lines will start to kind of converge a little bit here. And this actually, in and of itself, by itself, is a bullish scenario, bullish setup. Now, in order for that to unfold, folks, what's going to have to take place? Let's adjust those, get those out of there real quick. What's going to have to take place is we're going to have to get above this upper line up here. And we do have a few different levels of resistance to keep an eye on that we could keep in mind to say we're going to have to get through there. Now, we got through kind of one today. Now we're just above it. And here's the next one here and another one here. So we've got actually two more highs to get above, as well as that ascending upward line. But getting above that level is really where traders will look for bullishness. Now, you guys, I've sent this out, and you might have seen this X post that I sent out fairly recently. I'm just going to throw it out here quickly here for you. That is September in a nutshell, right? I just thought I'd use the tweet. Might as well. Makes it nice and quick and easy to do. We'll see what does happen there, though. But there you have it. There is September and a 10-year time horizon. Yeah, we do tend to get that pullback. I highlighted it because, hey, it's one of those time frames during the year where you do see a distinct move on average. That's the key, on average. Now, you also see a pretty distinct move coming out of October. November, I think now, at least over a 10-year time frame, due to a couple of events that have really smashed up March used to be the strongest month of the year, but we had COVID that hit during a March timeframe, really the biggest impact of the market. And of course, tariffs this year. But you can see we're back into kind of a seasonality motion, and we might see a pullback here, we might not. But I just wanted to put that in the context of what the price data is actually showing too. And what that means with an ascending triangle. To show strength here, you got to get above that upward channel in terms of a breakout. Kind of what we saw over here. Let's just show you another example. They're all over the place, and you'll see this on some of the slower upward moving motions like this. But notice the kind of the tightening of the two trend lines. Something like this. It's always easier to look at the example instead of me just rambling on, but a move like that. Now, what does that move entail? We broke across the prior high, and we also broke above the upper trend line, which is known as our resistance. Resistance for short. Resistance is a long word. It's resistance. If you get above here, it could be positive. That's the question, right? In the longer term trend. So I wanted to highlight that for you. Before I move on, though, to holding above the 40 to 50 range. I did a think script on this. There's a scan out there. It's really quite ancient now. It's over a year old. It's one of the first ones I did. But a lot of times traders will look for a pullback in the markets that comes in, and holds an RSI of, let's say, 50 to 40 range at least. If it starts to go below there, it's kind of a little bit weak. But on these pullbacks, are you holding 40 to 50? We sure are. We're holding that range right now, and we're holding it pretty nicely, if I do say so myself. Okay, so no real shift just yet. So that's kind of a more in-depth, really throwing this under the microscope and looking to see, hey, what are some things we could be looking at right now? Okay, well, there is a jump in the market, and as we look at this, we'll just dissect this big picture first as we go through our major market indices. Now, the NASDAQ had a nice little pop, and notice too over here, the NASDAQ had dipped a little bit previously. A lot of that was due to the Mag 7s, and we're holding up, though, in a nice bounce. Now, remember, those Mag 7s are going to be in the S&P 100. I actually have the 100 up right now. I've got the S&P 500 as well. You can see it's a market-weighted index, and so the bigger market caps you've got, Google, we've got a couple Googles in there based on the different class sizes, they can have an impact on the market. Apple, Google, Tesla are really in the green today, pushing those up. Now you can see those pretty clearly, right? That's up 9% today. That's what can cause, a move like this to occur. I did send out another post here for you guys. Oh, I'll talk about this in just a second, but just right here, I was just going to highlight this. Yeah, the big moves are coming from this range, and just a few mags have kept the S&P up on the day. I'll just go ahead and post this if you want to take a look at it. I've got that is the X handle. Be sure and follow Barb on there as well if you guys aren't ready following us. But as we look at the mags, they're really making a difference in the market right now. And if the mags can stay strong, and sometimes in a decreasing, sometimes in a decreasing interest rate environment or expected decreasing rate environment, you know what can do well? Technology can do well. This is updated. This is the rate cut probabilities. They're now over 95% for September. That's the highest I've seen them. I updated it when I saw it new. Remember that Fed meeting, September 16th and the 17th. That's going to be a Wednesday, Tuesday, Wednesday in approximately 2 weeks. It's 2 Wednesdays away, would hit us on the 17th. But just so you know, a hold there, only 4.4%. 25 basis point cut, really quite high, and technology can actually do well in that realm. Okay, so let me just minimize that, and we'll take a look at this. So there you go. So will technology play a key role? It might. The one thing we are seeing today, that's kind of the spike we're getting, and so keep a watch on those. If they remain strong, that could be interesting. If we just throw in the EW, S&P 500 equal weight, it's not nearly as strong. That, folks, when you see that happen, that is the impact, really, in a lot of respects. It's the impact of the Mag 7 on here. If one is up versus the other, I mean, if you try to equal weight it across all these companies here, they're all the same box size. It's not having an, well, it's slightly down on the day. It's actually down about 13.5 points, or right in that range, right? It's down. But if we take out the equal weighting, that's what's accounting for it, is the Mag 7. So here's just to look at the Mag 7. Again, I've showed you guys how to do this. You can just add them all together on the platform, Apple Plus, Microsoft, Google, across the board. And there you go. And that's that spike. It looks a lot like the NASDAQ, but it's a little bit stronger even than the NASDAQ 100. So it could lead the way. Interest rate cuts could power technology amongst other, stocks out there. So park that in the back of your minds for sure. Now, I wanted to talk today about creating posture in the market. So giving us a sense each and every week when we come, we can run through the general posture of the market. There's long-term, intermediate term, and short term. And I've got some ideas that I want to show you guys today to help us kind of implement that. And what we're going to do, we're going to close this down. We're going to open up our scratch pad. And what we're going to do is I'm going to just pull this guy down. That was from a different class. And we're just going to go over here. So market posture. And what we mean by that is bullish or bearish. What are we seeing over those different time frames? Want to make sure we got something solid that maybe, well, or at least, solid in the sense that we're using it over and over each and every week. Obviously things can change, but this should give us a pretty good idea, long-term, intermediate term, short term, of the SPX. We'll use the S&P 500. We could use them on others as well. But let's start off with the S&P 500, and let's get this together right now. Okay, so what are we going to use over here? I'm going to take out this 50-period moving average, which we've used before, but we're going to use something a little bit quicker on our weekly charts here. I've got a 10-year weekly chart up. I'm going to maximize this here in just a second, but let's throw this in. Let's get some exponential moving averages in here. Those that are going to move faster with more recent data. In other words, they're going to be a little bit quicker, more responsive is what I should say, to the more recent data within the time frame that we've got set up here. These are the time frames we want to take a look at. So initially, what we'll do is we'll do a 10-period moving average, 10-period exponential moving average. We'll give it a little bit of weight here. And let's do this. We will go, sure, we can use any colors, that's fine. We'll use a shorter term, though, as kind of a dotted line or space so we can see it. So here's our 10. And we'll go ahead and go with the 40 now. 40, we'll get this bright color that shows up on that black backdrop. And here we go. So here's the long term, here's the short term. Let's put it in place. And what we're looking for here is what's the situation? What's higher, what's lower? It's going to be very, very clear. I still like to keep these long-term fib notations on the chart. It reminds me that sometimes those long-term fibs can hit spot on. So I like to keep notes on my chart. I think many of you do too. So I'm just going to leave that on there. Here's that ascending triangle. But basically what we're looking at here, and this is going to be really easy to see, is the 10 period above or below the 40? And if it's above, regardless of seasonality or anything, what is the chart showing us right now? That is bullish, and you can see right there very, very clearly that's a bull. Okay, so that's bullish. Let's go over here and just make a notation of this. So long term, the 10 EMA is greater than the 40 EMA. Okay, and that means that is bullish. Okay, so that's long term. Let's go to intermediate term. Now, long term in many cases can be, in my mind, I say 6 months or more. Sometimes I oftentimes will say, 1 to 6 months is even intermediate term. Some would say that's long term, Mike. I say 1 to 6 months is intermediate. And then beyond 6 months is really the long term. It's really long term. I mean, over here, look at this. This is like, well, I've zoomed in on it, but that's like, a couple years. we're looking at here. We're really looking at the long term in this case. So you might have different sort of ways to measure long term or short term, but that's what I'm looking at right now. Intermediate. Now for the intermediate term, what I want to do there on a week, this is going to be back on the daily charts. Let's go back to the daily now. This is how we're going to do this. I'll minimize the RSI right down here. And this is going to be really, really straightforward. Okay, so we're going to be looking at a 30 EMA, so exponential moving average over here. And we want to see specifically what this is doing for our intermediate term time frame. I'll go ahead and just keep the same colors that we had for this one, but this one is going to be a 30, right? So let's go ahead and just take a look. It's on a daily chart. Why? And we can look at this right now. Now, what's the direction of that trend? So we're not really looking at price relative to that line, but what is the line itself? It's trending up, right? And you can see that we've sustained this very beautiful trend this whole way without even trying to custom fit it. This 30 EMA is one that is really quite popular when looking at intermediate term timeframes with a number of investors, traders. I've read about it for years. Exponential moving average. You can see how well it's kind of hugged that line. I'll erase it so you can see it a little bit better. But yeah, right off the bottom of that lower trend line, almost in a couple of places too. Very, very close to it nonetheless. But it is going up. And so when it's going up, we're going to term that to be bullish. And we'll just say this. The 30 EMA trend is up, and that also is bullish. Now, short term, all we're looking at here, it is on a shorter term basis, but we're looking at higher highs and higher lows. And that was the very first thing I looked up. So higher highs, let's see if I could just put some colons in here to distinguish or to mark that. All right, so short term, there we go. So this one, we got to kind of look at the price trend itself, higher highs and higher lows. Are we getting that? Indeed we are. And so that as well is bullish. Trend up, bullish, same thing. But that's market posture. I hope you guys found this helpful, but I want to utilize something like this each and every week. Not something like this. Let's be really specific with it so we can kind of get a sense. But don't you like how that lines up with the chart too? And you get a pretty good sense of it. Oh, one last quick note over here. So I'm just going to do this. I got to put this in here. So I've got to say weekly. We're going to drop it down to the next line, but it is a weekly, and this is a daily. And this short term, intermediate daily, short term is daily as well. It's going to be our reference point, so we have a really good sense of that, where we're at there. Okay? All right. Well, let me jump back and just see what else we got here. I think we're all good in the chat. Hello to you, Janelle, just joining us. Great to have you on board, as well as Mark. Welcome, welcome. And perfect. Trade Grow. Others in here. All right. Yeah, any questions, comments? Let us know in the chat, but that's your posture. So when they're all in line, and what do we have here? Well, we've got actually 3 check marks. Blue, blue, and blue. It's all bullish. It's all bullish off each and every time frame here. So let's just see what happens, with this top. And it's always kind of interesting too, within the trend, we did draw in there sort of a price pattern too, to give us even more clarity around where support, where resistance might be as well. But heck, like a lower moving average like this could be very, very helpful. All right, coming in at that base. All right. Well, excellent. Let's pull it up and let's go into some of our other studies here. Now, you guys had mentioned too that, just jumping back here, just some magic trick. All right. So this is the rate cut probabilities. It was over 95% expectation of interest rate cuts. Now, how has the market been responding to that? Well, I'm going to go over here now. Let's look at that sector rotation grid. specifically. And, we'd seen with that expectation, actually some of the prices, coming up over this time frame of that market expectation. You can see right over here. Well, we've got materials, we've got financials. This one over here, this is energy. These don't always stay on. It's just like right there. I'll pull it down. Discretionary, of course. Yeah, discretionary. Healthcare's bounced a little bit, right? Comparing the individual sectors to the performance of the market. I'm just using the relative strength indicator to help us with that. That's it, right? Relatively speaking, they've been doing well. Industrial's been tanking. Infotech, we'll see what does happen with infotech. Look at communication services. I'll tell you what's pushing that up today is Google Alphabet, right? They got a favorable ruling on a lawsuit. By the way, I don't know if you guys have ever looked at like lawsuits in general. I have found those to be the most unpredictable, unstable ways to try to get it. Who knew? Unless you had absolute knowledge of, the status of that, and you still have to guess on how, a federal court judge would rule, which is what they did rule on Chrome being, I think, separate from Google or whatever. They don't have to spin it off or something along those lines. Well, anyways, there's a big jump in there, a little over 9% right now. Very, very difficult. I never hold myself like say, dang, I missed that one with these court announcements. It's virtually, I don't know how you figure that one out, especially you can know, the legal system inside and out. It comes down to one person and nobody knows how that judge is going to rule. So there you go. There's the jump in price, but that's really pushing the market up. I noticed Apple is up as well. We did have a swing trade example on this stock unfolding, as you can see. And this one we looked at, you can see the target level up here for this. And this was our little swing right there. Sort of a bull flag type scenario setup. It's kind of moved in that direction. Remember on this company, I think it's September 9th, they have the Apple Focus, which is kind of like the old Apple days or whatever, and that might help to fuel the buy on the rumor, sell on the news. I don't know, but it could get us closer to a target. Who knows? Anyways, that is one of the movers today, is what I wanted to highlight within the Mag 7, and you can see what kind of an impact that has on the S&P 500 being market weighted. Now, the next thing we want to do, though, is we did look at some of the markets. We looked at the sectors. We looked at posture in the markets, too. And I'm going to have those saved. Next time I forgot to hit save, but we'll save those. We'll have that in place. Intermediate, long-term, intermediate, short-term. But let's also take a look now, too, and see how the market forecast is doing. What is it showing us in terms of really kind of this is the intermediate term line we're looking at on the market forecast. Notice what we say. We always say, is it above 80? Just another way to kind of view what the markets are doing. It is above 80. And we say when we're above 80, regardless of the direction of that intermediate term line. It could go up, down, sideways. It doesn't matter. As long as we're greater than 80, it's a greater than sign. Greater than 80, according to the way many traders will use this, they say the market forecast is giving indications that it's okay to take long positions. That's the way they use it. We've talked about, being mindful also of seasonal weakness that can occur during September. We showed how over a 10, 20-year time frame, 5-year time frame, it's down on average. Now, prices can go up or down. That's what makes the average. But in general, yeah, you got to kind of be mindful of that too. But we're seeing another positive indication still right here. Okay, we kind of narrowed that down a little bit. Again, with the price pattern up top here, things to keep an eye on with that ascending triangle. Does it kind of look like the prior one or not? Right now, it's just still sideways to down. Okay. All right, so we've got a little bit of a angle on, well, a little bit of an idea, I should say, as to what to kind of expect. Everything's up across the board. We looked at it, long-term, intermediate, short-term, using moving averages that highlight trends, really, right? But very, very helpful, those moving averages, especially the EMA. It's a lot quicker. All right, let's go to our sector grid now. looking at the sectors outside of um, relative strength. So let's just see what we're getting right now and what's kind of holding up. Communication services, again, you're going to see that Google move really creating a big kind of a potential bounce in there, right? And that was kind of strong anyways. Technology, though, really strong today. If we look at technology now, let's zoom in on this. Collectively, could we keep an eye on a number of stocks in technology? We could. What do you guys see over here? Kind of like a bull flag with a little bit of that. Oh gosh, that's not diagonal. Not too well. It's more like a right angled triangle is what they call it. Kind of lower highs, but similar lows. Maybe some support, support, support. All else equal, we're holding some price action through there, aren't we? Look at all this price action we're holding. We're holding a lot of prior moves into a tight range, but it kind of really highlights for us the importance of this level and that level. That measured move range. Do we break below or do we break above? So again, technology can lead the way in an interest rate cut environment, and that's why we're kind of emphasizing that right now. We might drag through September, we might dip a little bit more, but right now we're doing a pretty good job of holding what we've got thus far. Again, some other interesting notables, I would say healthcare, defensive play. If we did see a market sell-off, perhaps this one might flag, but I think it might be rare to see them both kind of flag. This one broke that long-term downward sloping trend line, so healthcare, but you can see it, right? Some of these areas are so interesting because, yeah, I mean, right, look at that. Let's draw it down a little bit. Right off of these lows, yeah, these prior highs, right through here, we're kind of sitting on support. So what could be interesting is if you bounce off that support and go higher, if the markets dip, it may be healthcare, a defensive sector that actually starts to perform better, whereas technology could go down. Just some thoughts on that. All right. Well, let's dive back into really our core discussion, our market and sector review, so we can get through some of these details. I'm on the very end. There we go. Okay. So what we do see over here too is some strength occurring with the advanced decline line. So looking at advancers relative to decliners, still going higher. And that is oftentimes really quite good for breadth in the market, right? If you have a larger group, a larger basket of companies that are making higher highs over a period of time relative to lower highs or lower lows, the advancers outpacing the decliners, that's a really interesting indication for breadth. Now we use the summation index for breadth as well, and right now we're just kind of flat. Where you do tend to get, you want to keep eyes on it, is where you start to maybe bottom or top, just basically the direction of the trend. But right now, just showing some flatness. Now, if we were to break out, the summation index would likely go higher, which is a confirmation. If we break below our triangle and maybe break below that 30 EMA that we were just looking at on the intermediate term basis, I would say it's very likely that this goes down. So it's just kind of an additional read to what you might be seeing on the charts if you start to see weakness. Okay, we looked at the EW. Yeah, EW is nowhere near what the market's doing because it doesn't take into account a larger weighting for the MAGs in there, the MAG 7. All right, we still are just looking at that one Omen spike in red down there, Hindenburg Omen. Not so that can show a fracturing in the market. Generally, you're going to get like a fair number of these, maybe at a lower high right there. That's where it can become risky, and that's a lot of times when the market can fall over, just because you're getting a large number of 52-week new lows that accompany those 52-week new highs in the market. So we're kind of, I mean, we're clear there. Again, this is using a weekly chart. 5-year weekly is how we use those omens. Okay, not too much on the NYSE new highs as the market's gone higher, but still holding sideways here. It would be nice that you could see more breadth indications if we went up higher. This one, I would say, though, is a little bit kind of like flat to weak. So we're not getting a lot of highs in the market. In fact, you can see we're on the lower end of the range. If that's the highs and those are the lows, that is our 50% level over this range. We're a little bit low, especially since we're a little bit high up top here. You see that? We're a little high. I mean, we just made some highs. So watching this could be interesting, and it can be a precursor move. That's the symbol right there, $ NYHGH. If we were to break down here, it can be a precursor to a breakdown in the market. You can start watching for that ascending triangle breaking lower that we've been kind of hitting on earlier. Okay. That we looked at our seasonality. Again, to find that seasonality, it's under style, chart mode, and right there. We're on the charts, you know, initially got to be on the charts. Standard is where just a standard chart, but we're in seasonality. That's where that's at. All right. And that is a 30-minute chart, which is interesting. We'll see. Maybe we can extend higher what if we did this? What if we broke up here, pulled back, and that was a flag pattern coming up here? The question is, though, even if that flags and hits our target, bang, bang, we've got daily resistance just above. We've just zoomed in. We really put the microscope on this one. We're on 30-minute bars here, but it can be a really nice way to see, you know, are you setting up for a breakout or not? What does that intraday data kind of look like as we go through it? All right, well, we've got one more to go, and then we're all done. And that's going to be under the market breadth indicator, looking at this over here, and just looking and seeing big picture S&P 500, where we're at, relatively speaking. How are we doing? Well, you know, we're greater than the 200-day, greater than the 50-day. Yearly new highs, that's been kind of lagging a little bit. NYSE new yearly lows, well, yeah, those are on the low end too. And that's sort of I mean, that could be construed as a positive because we just don't have a big spike in the lows too. We're just kind of holding. It's just like we're almost in a waiting pattern. And that waiting pattern, I don't know, from what we looked at, kind of reminds me of this. A triangle is sort of a waiting pattern, but the range is getting tighter, folks, and tighter and tighter and tighter. And they say this as the market begins to coil, you know, tighter and tighter and tighter. It's eventually going to spring up or spring down. Now, in many cases, it will go in the direction of the trend. And what's that direction? It's to the upside. But we have to weigh that against seasonality too. So really just waiting and being patient. But right now we're holding. Folks, I hope you found this informative and useful. This discussion that we're going to be going through each week and just utilizing market posture. So we have a really good sense. I address this because I want you to be able to take something from this class and use just each and every week as you go through it. Of course, within this class, what we will do, we'll spend time going through and looking at sectors. A lot of times we drill down into those sectors and looking at specific stocks. Today, some of those that might be interesting, you know, some of the technology stocks, the discretionaries that were leading the way, right? Some of these have been flagging higher. Here is CCL, for example, right? Carnival Cruise. This is another one that we have kind of, well, yeah, it did dip pretty big yesterday, but still sort of maybe in a flag. It broke higher. But we looked at Apple, right? In technology. Those healthcares could be interesting too, but they might be the ones that fade if the market goes higher because they're more defensive. So market goes down, you might have a basket of stocks to look at in that healthcare group. All right, folks. Well, if you found value from our presentation, really appreciate it if you smash that like button. Just lets me know that it was valuable. Always open for additional topic requests, comments along those lines. Would always like to thank Barb for being here with us, folks. Be sure and follow Barb Armstrong CS if you're not already. She has a ton of followers, puts out great content there. You can follow me as well, Mike Fairborn CS. And by the way, yeah, please subscribe to our Trader Talk channel if that's something that we'd love to have you on board. We have over 160,000 people already. Again, if you're getting value. On that note, everybody have a great rest of the day, and we'll see you next time.